what's happening, people? My name is Dr. Connor, and today we're going to talk a little bit about financial influence and how you can be working on your net worth in specifically the markets that you want to be in. One of the markets that I've spent the last 3 or 4 years working on is Denver, Colorado. And the reason I've spent time in Denver, Colorado is because they have a great real estate marketplace. Now, during COVID, there was an opportunity to basically buy a bunch of properties at a good rate, whether you buy them with bank loans or seller financing. And in this video, I'm going to kind of explain to you exactly what I think makes sense, or at least what I did from a strategy standpoint that should help most of you build worth or net worth within the real estate space. So there's really 3 core principles. Number 1 is decide the buy box. Number 2 is decide the exit strategy. And 3 is decide what you're going to do between when you buy and when you exit. So the first thing you want to focus on is your buy box. What's your price? What's your down payment? How are you going to buy the property? If you can understand that, you can set a clear parameter for how you're going to acquire real estate. And the reason that most people are trying to acquire real estate is they want some appreciation, depreciation, equity, and cash flow, right? They want all 4. They want the house to go up in value. They want to pay down their mortgage. They want the tax benefits associated with that income. And then they also want the cash flow. When you're buying properties, if you're going to buy them in something like Denver, what you're going to do is you're going to need to really focus on finding good properties that are going to cash flow, whether it's a short-term rental, mid-term rental, or long-term rental. I think Denver's a great space because there's a whole host of people that want to travel there for the short-term rental side, and there's a huge marketplace for the mid-term rental side that you're not really finding in many other markets. Now, home prices have gone up and came down. You're seeing that kind of wobble back and forth right now, but what I'd recommend is that if you're going to get into the real estate space, you really focus on short, mid, and long-term strategies because you have to acquire the property, you have to manage the property, and then you have to disposition the property. And ideally, you want to buy low and sell high at some point, but that's not always the case. There's many properties that I've bought that we buy and sell at the same net price, or we buy and sell at a lower price, or buy and sell at a higher price, but it's basically the same thing after all the fees. And so you have to really focus on what's important to you and focus on how you can really grow your business. One of the strategies that I've worked on is through subject to and seller financing. Subject to is when you basically just take over someone's mortgage payments. Typically, these are people during COVID or 2020 that have 2, 3, 4% interest rate, and then you don't have to go originate a new loan at 7%. So imagine you have a $500,000 loan. You could pay $4,000 a month PITI, or you could pay $3,000 a month PITI. That difference is $1,000 a month, and that's what allows you to cash flow on a property subject to, but you can't cash flow on a property with normal bank rates today. So there's tons of opportunity there. Also think about the social impact piece of what you're doing, right? If somebody's behind in their mortgage, let's say they've had a home, it's worth $800,000, they got a bunch of equity, but they got behind maybe 3, 4, 5 payments. You can catch up their payments, take over their home, and they can move to something that's a little bit more sustainable for them. That happens all the time. One thing though you have to keep in mind is that you have to have a clear entry, growth, and disposition strategy. So your growth strategy needs to be short-term, mid-term, or long-term rentals. Short-term rentals are going to be nightly rentals, mid-term rentals are going to be weekly and monthly, and long-terms are going to be 12 months or more. You should really consider being in one space versus the other, because if you try to be in short-term, mid-term, and long-term rentals all simultaneously, what you're going to find is that it's incredibly difficult for you to be successful. And the reason it's difficult for you to be successful is there's way too much going on. So if you're going to pick short-term rentals, stay in that vein. If you're going to pick mid-term rentals, stay in that vein. If you're going to pick long-term rentals, stay in that vein. You also need to consider that your average home needs to go up roughly 20%, that's 20%, in order for you to sell it and get a return on your capital and get good value add. Now, we're not making any investment claims or income claims here with the kind of content we're putting out. It's purely educational, but if you think about it, if I buy $1 million house and the house goes up to $1.2 million, that's $200,000 in gain. When you bought that $1 million house, you probably put 20% down, so you only have an $800,000 mortgage. So the difference between 1.2 and 800 is $400,000 bucks. But the thing is, you're going to lose $100,000, 8 to 10% in your closing costs. That's your agents and all the other costs associated with selling a property. So the house really has to go up 20% in order for it to make sense for you to sell it. So again, we find the entry, the type of properties we want to buy, and the location we want to buy. We find the management strategy. Are we going to do short-term, mid-term, or long-term rental? And then what you do is the exit or disposition strategy to figure out, okay, what is the strike price that you're willing to sell at? If you're thinking that the homes are going up in value, you probably should try to sell 3 months before you think you need to sell, because everything takes time on market to sell. The best strategy, if you don't know what you're doing, is to go slow, get 1 or 2 or 3, maybe with a partner or 2 to kind of de-risk yourself. And then when you get to a spot where you're really happy, you can start multiplying and doing this over and over and over again. If you want to learn something in this space, if you want to kind of learn how this works, What you can do is you can go to YouTube, you can kind of plug in short-term rentals, how they work, mid-term rentals, how do they work, long-term rentals, how do they work, and then decide what you're kind of pulled towards. A lot of people go over to chatgpt.com and they will go put in some of these characteristics and say, okay, why would you do short-term versus a midterm versus a long-term versus commercial, multifamily, industrial. Figure out what you like, and once you know exactly what you like, go super deep in that, but have the mindset of, what am I doing to acquire it? What am I doing to grow it? And what am I doing to dispose of the property? Most people are exiting property somewhere between 5 and 10 years down the road, typically not less than 5, typically not more than 10. So in your mind, you have to do some math to make sure that that's going to work for you long term. Now, the last thing I will leave you with is not every type of deal you do is going to be a deal that you want to do over and over again. You might buy a short-term rental on creative finance terms like seller finance or subject to. You might say, hey, I don't like that. You might buy a midterm rental like pad split with just cash, and you might say, hey, cash is cool, but I can't really do that because I don't have enough cash to do this 5 times. Maybe do hard money, burrs, fix and flips. Whatever your strategy is, try a couple of these different things until you find what you like. And then once you find the thing that you like, you can kind of lock into that particular aspect, that particular type of real estate, and then just do more and more of that. Having a business partner is great. Having 17 business partners is not so great. So find 1 or 2 people that you really trust and want to work with, do the strategy, and I think you will find you will build tremendous wealth over time. If you want to learn more about this, you can check out my website, drconnorrobertson.com, and you can also check out the YouTube channel and all the other content we put out to see if this is something that makes sense to you.